Yo, yo, yo. Welcome back to the channel. Sorry for the late video. Me and Rico, at Rico's Trade on Twitter, we're just digging around. We're trying to analyze AMC from the cycle perspective and get a better understanding of it. So I'm giving him some credit on this as well because we were sitting here fooling around with it together. We do see a couple different possibilities when it comes to where we are at in the cycle, especially in regards to like comparative to before the June run, and where we stand now. I know that we've been talking about that a lot lately on the channel, that we're kind of in this like last sort of divot and we're creating upside here. And yesterday I talked about like the J patterns, right, that have been occurring. And occurred in the previous cycle. So on the left here is the 10-minute chart for AMC from like May 6th. You know, we're measuring up until we're really looking at like May 12th kind of region. This is the most similar move to me to what's happening now, assuming that we are in the same like divot of the chart and the same thing is happening. I'm going to show you some stuff about like with the algorithm and stuff that's like super similar and crazy. But basically what I'm looking for here is on this more, a little bit longer term Fibonacci extension. Fibonacci retracement, sorry. And I took the wicks off as well. I'm measuring without wicks here. What we're looking for is, to be honest with you, me and Rico kind of came to a consensus. If we see this sort of reversal that you see drawn out here, that kind of looks like a, what is that, like a, not like a brontosaurus, what's the one with the spikes, stegosaurus or something. If you see this sort of pattern occur here, I would say that what it's showing is that there's strength at the 0.5 Fibonacci level. And I'll just zoom in a little bit more here just so I can illustrate that better. See, so because we had this run up here, right, which would be, yeah, this run up here, same thing. So what we're looking for here is it's to come down, it broke its 0.5, just like it broke it here, right? Oh, that's a bad drawing. Just like it broke it here back in May 11th. And then we're going to look for this jump back up here to go just above the 236. Now, where this has us in and up, in a 236, for those, I know you guys are asking, it's right around 4290 right now. And what we're really looking for is that sort of sign of strength, because what we're looking at is you see nothing but distributions and accumulations happening back to back to back. What we want to continue is this sort of upwards momentum, so that then it kind of confirms, that we are continuing this upward trend that we similarly saw back here in May. So I know today was kind of like it was like a big day as far as sell-off. I think it was down like 11% or something like that. So obviously a lot of emotions out there, stuff I was seeing on Twitter, everything like that. Overall, I mean, your conviction is your conviction, right? What you believe in is what you believe in. And I'm not here to give you a motivational speech, but I'm here to analyze the chart. And I'll say that from this perspective, if you're looking at it from this perspective, we've had, and also I'm counting the peaks here, 1, 2, 3. I would also say that after this, like, kind of like, kind of a cumulative nature here that we saw from May 11th to May 13th ish. Well, and then at the end, we did see this big blow up. We're gonna want to see a pretty significant J movement, and really it kind of correlates with what we've been talking about, which is, we're gonna want to see it to confirm that we're in this part of the cycle. Let me remove these letters, sorry. To confirm that we're in this part of the cycle, it pretty much requires us that soon we do see this sort of larger move up. And if we don't see this larger move up above well, probably not that high. Maybe like, well, what did it do last time? Yeah, I mean, so yeah. We last time it moved up to basically the previous like local high, which for us here is that 50-ish dollar level. So, you know, you're going to want to see boom, a break up here, slight consolidation above, and then boom again. So, well, what would that be? And then we can do like a Fibonacci here to try and get a better understanding of what that is. Sorry for the tone, by the way. Like I'm not like I'm not like aggravated or anything like that with the price action. It's actually I was calling for us to go under 40 a few days ago, everything like that. So as far as I'm concerned, everything kind of, you know, went normally. Went how it was gonna go. So on the more macro scale, if we look at it, just look at it. If we did like local Fibonacci retracements, what would that be? Wow. Yeah, I mean, yeah, I mean, it is pretty similar stuff. Let's see. Hold on. I wasn't really planning on this, but here, right? You have that same Fibonacci retracement. Let's take all this off of the screen. Leave the retracement. Boom. Guess we'll just go to the 4 hour here. 4 hour here. Yeah, so make this bigger. Why does this? Oh, it's like the local move up. Okay, I got it. All right, sorry, I was getting a little confused there because I was like, this retraced to 618, but it makes sense if I measure it from here. We can we'll do the alternate measurement too after, but yeah, from this perspective, you have pretty similar support zones here, right? And then you have one basically here. Then, oh wait, hold on, it's gonna here. Well, my computer's lagging. Too much charting, dude. Here. I don't know. What does that mean? Does that mean that... Well, this doesn't really look similar to this, though. Well, hold on. Yeah, so what I'm looking at it from is the Fibonacci. That's what we're looking at. Plan out your videos better, bro. I only have... I'm sorry. All right, I'm sitting here. I'm just picking it apart. My brain's a little bit melted just from our me and Rico's like brainstorming session that we were doing. We're really trying to grind out and figure this thing out, so it can be a little tough sometimes. All right, so let's just assume let's front load it here and assume that this is this, and then this and this are the same. Looks like an angry guy, huh? What? Wind moon. So what I'm saying, I know that you guys don't really... It's hard to understand what I'm saying. So what I'm saying here is that we found the support eventually once we had like this crazy moment here back in January after the buy button was taken away. ultimately found support. If you measure it this way, we got rejected by the 0.236, rejected by the 0.236. We found support at the 382, found support just above the 382. So you have like this uptrend here that was created, right? That's what it is, similar uptrend. And so what we're trying to confirm now, in the way that we'll confirm it, well, did we poked, did we come back after we poked through the 236 on this scale? I wonder. Let's go see. Oh, for people who aren't really into technical analysis, you're not gonna be enjoying this video, are you? Well, yeah. Look, we got this little rejection here, and remember, everything's more dramatic this time around. But perhaps, well, was this no? Because we didn't. Oh yeah, we did. We just pumped after that. So sorry, I know this is hard to keep track of. I'm analyzing in real time. I probably shouldn't have done this, but I'm just brainstorming in real time. Yeah, I mean, you do have this rejection here just below the 236. But yeah, you did kind of just go up from there. Let's go zoom in a little bit more granular. Because again, it's hard to tell because it's like a repeating cycle. What is this? Okay, June. Yeah, we're almost there. Let's do the Fibonacci on this, and then that'll give us a better idea. So 0.382. Looking for a 0.382 over here. Really close. It's like a... Did it curl under? No, it stopped it out completely here. So the 0.382 completely supported. Here we do have a break below. We're at the 0.5. Yeah, I mean, from a cycle perspective, that's kind of what I'm leaning towards. And then also I did show Rico this. We do let me do the RSI. We do have a hidden bullish divergence on RSI on a 10-minute. So I do think that that's a pretty good sign that we're going to see a little bit of upside to open the day tomorrow. Also, there was basically nothing happening in post-market, which is kind of weird, but what isn't weird these days with this thing? Because like yesterday we dumped in post-market, today almost no trading whatsoever. But yeah, we do have this hidden bullish divergence on the 10-minute chart. Basically, your oscillator is weakening while your price is creating higher lows, is what that means. So lower lows on oscillator, higher lows on price action. So I will expect somewhat of a bounce here, but like I said, we are definitely going to want to see, that sort of upwards consolidation going into the end of the week. And then yeah, I mean, coming up here soon in the next few weeks, some pretty explosive upside if it is in fact that point in the cycle. Now, if not, I will say that this overall does resemble distribution. And so if you see further downside here, I'm not sure. I mean, I think we would have to go back to the drawing board on the cycle theory stuff, and maybe we can check out some people who are a little bit more focused on the cycle theory to better understand that. But I don't think that would be similar to the previous cycle. So that's where I'm at with it. Now we'll talk Wyckoff here as well, and where we think we stand with Wyckoff considering this move. Sorry guys, I'm just a little tired. I get I was talking to Rico for way longer than I was planning to, but I mean, I still generally feel the same way, that pretty much this is a sell climax. Feel like you have your automatic reaction. Really, it's probably here. Cell test. And then you had a cell test in phase B. And then this was like your phase B. Right? So B. And then this is, I mean, it's still this. I mean, this definitely looks like a kind of a phase C LPS, or even if you wanted to, you could look at it as if it was like a kind of like a spring phase. Oh, actually, the wicks help you kind of see it a little bit better if you draw it with the wicks. So yeah, if you did want to move this over here, you could say that you have like this. If it's like a, because you can draw it like with a trend support line, and then breaking that trend is kind of your spring right here, right? So spring, which is basically, for those who don't understand or like aren't familiar with Wyckoff, I'm sorry, not don't understand. Basically, a spring is like a low volume event where the price breaks below a key support line, and basically that signals the reversal for institutions. And then now you're testing the support. Now, I will say that, with this test, if this is in fact a test and this trend line being considered, we definitely want to hold on to this trend line. If we don't hold on to this trend line, so yeah, I mean, I think all signs are kind of pointing to an upside move going into tomorrow. How high? I mean, it's a little bit harder to predict. But I mean, you can definitely go, obviously go check out the chart yourself and get an idea. I mean, it's possible that, that maybe this is a phase C spring and test. And that's why the moves feel so much more dramatic. And so then what we would be going into is a more steady last point of support, and then sign of strength, and then have your eventual move up for AMC, if that's how it ends up breaking down. If you're not familiar with Wyckoff, basically what I'm referring to in all this talking, I know that I'm kind of assuming people are understanding what I'm saying, which I shouldn't do, but I am. Because I make a video every day. So if you haven't subscribed already, make sure you subscribe. Sorry that this is so bright. It's currently burning my eyes out. But yeah, I'm basically referring to this schematic. So it's basically just a trading range, and institutions are just shaking people out of their positions so that they can accumulate before they eventually have a sign of strength. They break above that trading range, and then they come back and retest it before they mark up the stock. And then like this is the comparative. So I can show you side by side what I'm talking about. And then volume plays a big role in this as well. Generally speaking, the volume being in a downtrend has been bullish, as the price has been in a downtrend. I mean, it's kind of what you look for, So, yeah, I mean, here in the short term, I know we've seen some big moves in the past few days, but it's gonna be a pretty yeah, it seems like something eventful is gonna happen, based on the cycle theory, based on Wyckoff, everything that I'm looking at. Obviously, I think it was like 2 days ago I was calling for under 40 on AMC, and then like yesterday or whatever, whenever it pumped up to like $47, everybody was like, "Oh, we're never gonna see 40 again." And I'm not trying to take a victory lap or anything like that, but still, from a technical standpoint, if you're ignoring everything else and you just put it in a bubble, I mean, it's it's a 618 retracement. I mean, this is normal. If you have a big move like this, it's kind of what you're looking for, is to get that retracement before you get that, nice healthy retracement, load up, and then you make your next move up. But yeah, if we're looking at it from J's, those little J patterns that I referred to earlier, I'd say that, you probably have like one here, and then like an expanded one here. Yeah, I mean, that's definitely distribution. And then really, I mean, yeah, you're going to be looking for a more drawn out, more explosive one here. And then that would be pretty much your sign of strength above the trading range, which is established by this. And then you're going to have some consolidation above that range before you have your markup. So that would be like a confirming accumulation. I mean, just looking at the volume though, I mean the volume is very bullish. You have downtrend, but you have the general price downtrend, but whenever you have spikes in volume, the green ones always outweigh the red ones, which basically means that bulls, what it seems like, our bulls are the ones who are pumping the price and then dumping the price down. And as the volume continues to decrease, basically bears are losing more and more momentum as the price is in a general downtrend. And that's generally bullish. So it leads to the insinuation of more upside just because there's less conviction in the bearish move. Now, if it was going down like this, look at this volume. I mean, it's like, hold on, let me get all these crayons off of the screen. Yeah, I mean, this volume candle, this big green one here, this green price candle, look at it in comparison to the bearish candle next to it, right? You have this big dump, significantly less volume. I mean, to me, that's bullish, and so I know that today, it dropped like 12% or whatever, big dump, whatever. Overall, to me, it looks like bulls are still in control. Whatever institutions are controlling the price of this thing, they're the ones who are making the big plays. To me, they're confirming that they want more upside, but in the meantime, they're just going to create these sell-offs so that they can keep loading up. And regardless, I mean, and I know that we talked about like the shorter term accumulation. Let's look at that right quick. Let's just look at that right quick, because that'll be a good way for us to kind of guide ourselves as well. So if we look at the accumulation schematic, but instead we look at it from this perspective, right, where we kind of zoom in. Let's see, go down to the hourly chart. So the way that we're measuring it is from the $50 peak in September. Pretty clear sell climax here, especially with all that volume. Automatic reaction. Sell test. And it doesn't have to go exactly like the schematic does. So in this one, like, this would be your sell test in phase B. Even though it doesn't break the trading range, it's still a sell test. And then make sure you check out this, just look up Wyckoff theory and look for this stock charts link. You'll be able to read up on Wyckoff. It's really useful stuff, really good stuff to learn about. Make sure you go do that. Not a sponsor, by the way, just really useful information. Yeah, I mean, it looks like here you broke this local trading range to me. For sure. Yeah, and you're coming back for your backup. Yeah, I mean, overall, to me, this looks good. Now, I will say that this doesn't look good, this red candle. But let's go see if that's actually a green candle if we zoom in. Yeah. Yeah, I mean, it's green. It's what is this? November 3rd at 9 o'clock. Just confirm it right quick. November 3rd, 9 o'clock. Yeah. So I know it's a big red candle, but actually, if you zoom in, it's actually a green candle. It was it's a green as far as like the volume was dominated by bulls. But because it's on a longer time frame, it comes up as red. Yeah. So overall, I mean, this does look really similar to that move before in May. It does. Yeah, you're backing up. Gaining a last point of support in your key trading range, and then I mean, maybe you have some consolidation here, like we discussed, probably, right? So what did I say? General uptrend, and then you have your markup. So that's pretty much what I'd be expecting. And the key thing to match all this stuff up is it makes sense for AMC to go and break above its 50-ish, like 50, like maybe $55, $58, come back, consolidate some more, and then that's going to be the larger accumulation that we talked about before that started back here, right? So that's pretty much how I'm looking at AMC. Stuff like that. Hopefully I didn't say way too many times. I saw a bunch of comments about that, and I'm tired, so that probably means that I did say it a lot. So I apologize if that is the case. Hopefully you gained something from the video. Oof, there I am saying it again. I need to learn how to pause whenever I'm gonna say it like this. Like I want to say it really bad, but I'm not. Look at that. Did it. I'm stronger now. Damn it. I did it again. But yeah, so that's pretty much the video. Hopefully you enjoyed. Make sure you subscribe. Drop a comment down below. Let me know what your thoughts are. Join the Discord. Dang, I said it again. Join the Discord and follow me on Twitter. It'll be down in the description. And until next time, take it easy.